notes. And another Colombo is an investment banker. Kamal is from IFC because IFC is owned by World Bank, but they invest in private sector. So that's interesting. So Jim is Standard Chartered Bank Sri Lanka CEO. We have Thilan once again. Thilan is going to talk about two things. PPP. He is a father of PPP in Sri Lanka. He also going to talk about the unique business model of Port City. And Gordon is going to speak about, he's from Allianz, he's going to talk about managing risk management in infrastructure. So there are a few things we have been discussing, but the risk element, I believe, Kamal brought up. Then I think at least, Sumedha brought it up. At least another speaker brought about the risk management. So that's an area we do not have much expertise because we haven't had infrastructure projects of this magnitude, maybe after SAGD. So bringing in the risk management element is extremely important. Rohan is a man who performed a wonder, setting up, London Stock Exchange Group, facility in Sri Lanka within a matter of 6 months, Rohan? Something like that. So who says that difficult to do business in Sri Lanka? Okay. And Leanne, once again, Leanne's expertise in property and in high-end property marketing internationally. He's based in Singapore. He's a Singaporean, now based in our beautiful city. Kamal is an infrastructure economist. So that's the, Kumudu. Okay. So Kumudu is an infrastructure economist. So he has the right background and he has had hands-on experience in large-scale infrastructure design as well as consulting in the United States. So ladies and gentlemen, so this is the final session. Now we are close to 4 o'clock and we will go till around 5:30, 5:35, and then of course we'll have the most, interesting part of the day, cocktails. So please put your hands together and welcome our panel of experts. Over to you, Kumudu.
Great. Thanks, Lakshman. How are you guys doing? Good? Come on. How are you guys doing? Yeah, good. Throughout the session, we've lacked a little bit of energy from the audience, so hopefully we'll get things going here. Very interesting topic, 40 billion in 10 years. We'll debate the validity of that and if that's even the right number. So without taking too much time, I invite Anupam to give us a presentation on brand building.
Thank you. Hi, I'm sorry that you've had to miss your coffee break. I'll try and make this as interesting as possible, as I'm sure the rest of my colleagues on the panel will. The presentation's called Driven by a Pride for obvious reasons. I think nations are often about drivers of pride, and pride is a great catalyst for building nation brands or city brands, what have you. I'm going to break up my presentation today in a few different parts. The first is a very quick introduction to the partners, which is a world-leading brand design innovation agency which I work with and is part of the WPP group. Very quickly, I'm actually going to spend some time in setting up what I believe is a nation branding framework. This is something that really wasn't, hasn't come out from a textbook, but something that we put together when I was part of Branding India about a decade ago, and had the fortune of being part of what is perhaps the most successful nation branding campaign ever, and I'll share with you why exactly that is the case. The third part is really about Brand Sri Lanka. This has really been put together in about 48 hours, partly because this is my first visit to Colombo and to Sri Lanka, and I hate putting suggestions or ideas together for brands that I'm not familiar with. So I've tried as much as possible to get a crash course in Sri Lanka over the last 48 hours. There's only so much you can learn from the internet, so I've tried very hard to have some really interesting conversations. Lakshman was kind enough to put me in touch with some really interesting people at yesterday's reception. So I'm going to talk briefly about some ideas and a framework for Brand Sri Lanka. And finally, I'm sure I don't need to tell you what 1996 represents for this country, so we'll come to that. Very quickly, and I'm just going to skim through this, we are the world's most awarded brand agency, which is not necessarily the measure of success, but it's a good indicator to kind of tell yourself that you're on the right track. It's really the work that we do for our clients that really talks for itself. We've had the privilege of working with many private sector organizations, but also some of the world's leading cultural institutions, and some of them are up here. And I think when we're talking about nation branding, I think it's often good to look at, nations are concepts and really representations of cultures. Very quick look into one of our global clients, Deloitte, which we began work with about 8 years ago, and we reinvented this brand and came up with the idea of the green dot, and it's really endured, and it's now, we're very proud that it's one of the world's leading professional services firms. Another one closer home is AirAsia. We began our Asia practice only about 5 years ago. This was our foundational client, and we worked with Tony Fernandez, who's a really ambitious entrepreneur, and what began as a conversation to brand the tail fin of my aircraft became a brand transformation program for this fantastic airline. This was the before. As you can see, it's a sea of red. This is the after. I won't spend time on this, but the idea here was inspired by Asia, and I think we gave the brand a tremendous lease of life, and it's still going strong. So very, very proud of that work as well. But coming to the subject at hand today, how loud is your echo? I think that kind of phrase is self-explanatory. It's about doing something loudly, hopefully clearly, and letting the echo last. And in marketing terms, I think it's an interesting phrase, and I'll come to that. But if you look at the global marketplace, I think it's already cluttered with all sorts of brands. And I think whether it's London or South Africa or Malaysia, there's a lot of stuff out there. It's about tourism, it's about investment, everybody's doing it. This slide is actually about 10 years old, so there's a lot more countries and cities in there now. But I think what differentiates really from the ones that are successful from the ones that are not is perception. Regrettably, this isn't about product. And I know a lot of my colleagues on the panel, and rightly so, will talk about product and ease of doing business. But I think we need to separate the two. Country brands or city brands, for that matter, often operate at two levels, always operate at two levels. There will be the day-to-day, the year-to-year, in a democratic framework, election cycle to election cycle. There will be that. That's reality. That's life. But the brand doesn't need to, should not, if it's managed successfully, should not operate in tandem with the product. It should be ahead of the product. It should be selling a vision. And that really is what perception is all about. Regrettably, if you don't do this, you're going to be limited to name recognition alone. And that name could mean anything. You let others actually frame the positioning for you, and you let the stereotypes determine your brand's positioning. And this is very true for nations. This is a very simple setup that will tell you that on one axis there's the medium, and on the other is message. And I think as there are more and more messages, as there will tend to be, despite what you will be told by many so-called nation branding experts, there will be no cohesive platform that can send out one message. There will always be several, and as it should be. You can't really control message in a democratic nation context. So there will be many messages, but if there is some sort of alignment, then you can probably try and traverse this trajectory, which is obviously not as linear as I've made it out to be, but increased investment and economic activity. But there are three very important phases that a brand must go through, and I don't think there's any way to avoid this. The first one is about information. You need to provide solid information to people who take investment decisions or influence investment decisions. Hopefully, if you do it right, it's going to be helpful in shaping opinion. And finally, you can actually expect that there is positive experience. This is a very confusing slide, so I won't spend too much time on it. This was done by a management consulting firm that we worked with about 10 years ago. But what it basically shows you on the left is a strong brand eventually leads to economic growth and quality of life, but also influence in geopolitics. And I think that's a very important objective. Often, nation branding campaigns are about tourism. I think they need to be about public diplomacy, but perhaps held together by an economic brand strategy. At the end of the day, brand building for nations, often for products as well, is about being different. and choosing things that actively make you different and stand out from the others. This is the model that I used for branding India. If you look at the bottom of the pyramid, it's really about the positioning. The center part is about the activation and managing the campaigns and the activity, and hopefully you create brand ambassadors and networks of investors or people who believe in your brand. This was the positioning that we came up with. It was a really interesting story. I won't get into it right now, but you can have a look at my LinkedIn profile and see the story there. The fastest growing free market democracy was basically an idea framed competitively vis-a-vis China. That, India was not going to be able to compete with China at the time. And we came up with this. This is actually a billboard at Zurich Airport. We ran a campaign called India Everywhere at Davos. It took about 18 months in planning. And it was perhaps, as I said, the most interesting nation branding campaign ever. In terms of data, you can actually see this is FDI figures, not including remittances, but equity from companies that flew into the country. And it's very interesting, the pattern. These were the 3 years that we, as India Brand Equity Foundation, which was a joint venture between the government and the private sector, was, I think, in sole measure responsible for this success. And it was tremendous. I won't get into the detail, I don't have the time. But coming very quickly to Sri Lanka. I apologize for the font size that's going to follow, but I'm going to talk you through some of this so that you can make out. This is a very simple framework. On one axis, there's time. On the other axis, there's differentiation. And I think the key point here is that you need to keep being different. But at the end of the day, it needs to be rooted in some sort of an insight, some sort of an idea. What it says here is brand Sri Lanka wants to delink its positioning from a South Asian nation to an Indian Ocean region positioning. This is what I heard yesterday. The megapolis project, while compelling and visionary, requires enormous amounts of capital, talent, and conviction. It also needs a balance between strategy and execution, and to build a strong foundation and template for cities and sustainable growth across the nation. This is today. What's the insight? I've only spent 24 hours here, but I think based on experience and understanding of the region generally, post the financial crisis, there is renewed belief in Asia, and specifically in India, as an investment destination. Could Sri Lanka be a bolt-on investment destination strategically and tactically? What's the idea then? Could we think about positioning Sri Lanka as an alternative to Singapore and Mauritius for foreign investors, and more specifically, investors targeting India? There's only 1 minute left, so I'll have to really speed past this. Essentially, what this talks about is doing a series of things that make Sri Lanka more than what it is. And I guess we might pick it up in the discussion. But essentially, I think the ambition needs to be different. And it doesn't have to be linked in size. You can always punch above your weight. That brings me to the last part of the presentation, 1996, when the team from Sri Lanka won that famous World Cup. And I think it was about entrepreneurship, which in my mind is the pursuit of opportunity beyond the resources that you currently control. Here are 10 things that I thought as tactics. We're in the World Cup. Imagine that it's begun. You have to build this megapolis, whether you get 40 billion or 400 or 4. I think the point is almost irrelevant. You still need to have some strategies and tactics. Think horizontally. What I mean by that is don't think about trade numbers, investment numbers, tourism numbers. Think of what's the glue that brings it all together. And in my mind, megapolis is a great idea because cities operate horizontally. It's about all of those things. Business-led, I think very important, entrepreneurial leaders, government coordinated, but community owned. At the end of the day, if a nation brand has to be owned by its citizens. Have a 30-year vision, but have a 3-year implementation horizon. Reconcile, renew, and relaunch. There is no such thing as a perfect strategy. Human capital is key. Get the best talent, whether from Sri Lanka or foreign. It doesn't matter. There's a lot of talent out there. Some of the best teams in the world in any sport often have no domestic talent. This is not about ego. Finance is fine, but make sure there's fun. And that operates at multiple levels. Master developer approach. I think there is a master developer for Megapolis, but I think the idea is very, very good. There should be perhaps 2 or 3 key master developers in any large-scale project, not fragmented too much. Build buildings, yes, but build brands. Brands sit in people's heads. They have enormous equity. I won't go into whether they can be measured or not. Yes, they can, but that's a topic for another discussion. Heritage is a key driver. If I look at Singapore, where I live now and call home, I think it's a great example of how it's transformed in 30 years. But what many people don't know about is where they see the gleaming success of the infrastructure, is how heritage has been carefully nurtured and is, in fact, perhaps in the next phase of transformation, going to be a key driver for Singapore's continued success. And last but not the least, mega events. can be catalysts. And yes, you'll say Commonwealth Games, Commonwealth Summit. I think this is not a prescription of bring the Olympics or bring the Commonwealth Games. So I'm going to leave you with a thought and an idea of an event called the Volvo Ocean Race, which I think is a perfect fit for Sri Lanka. It's the world's longest yacht race, and the stopover brings enormous kinds of benefits, both economic and social and cultural, and puts you on the map. Alicante, a city, a port city in Spain, has used this extremely strategically and successfully. Again, I could go on and on about this, but I will end now. Thank you so much. Hope you found that useful.
Thanks, Anupam. With that, Anakali, you want to share some thoughts? I think it's an interesting perspective from an investment banker.
Hi, good afternoon. So I've now got the not only competing with the fact that everybody's not had their tea, but I've also got to follow the advertising guy. So
Branding guy. I don't do
sorry,
advertising.
branding guy. My apologies. So I'm going to be tackling the topic of ease of doing business and facilitating capital flows. I thought starting with the World Bank's ease of doing business rankings would be a familiar benchmark for most people in the room. Since 2009 and the end of the conflict, Sri Lanka has made progress in terms of the ease of doing business index. However, this has not always been a linear progression. The 2016 ranking for Sri Lanka improved to 107 from 113 in 2015, but if you look back to 2013, our ranking was 83. Admittedly, there have been criteria changes to the ranking, and it is not a perfect system, but rather a guide. And yes, it is a limited indicator, but it is a benchmark and a report card which enables us to understand the areas that investors evaluate when making investment decisions across different geographies. You have to remember that we live in a highly competitive global market with stiff competition to attract capital. Sri Lanka does not have the advantage of a large domestic population like our neighbors, India or Bangladesh. Neither do we have the natural resources of an Indonesia or Myanmar. Therefore, we have to focus on leveraging our geographical location, creating access to larger markets on preferential terms, developing a skilled, productive labor force, and creating an open, flexible environment for new, innovative businesses to set up and invest in Sri Lanka, and especially in this proposed Western region agglomeration. I think there are certain fundamentals to attracting capital and creating an environment conducive to doing business. For one, a strong legal system with clear enforcement of contracts is key. Sri Lanka has the advantage of English law being our basis for commercial law, but we have to improve the time taken for litigation, which currently averages around 4 years. Banks and companies require legal recourse in a shorter and more effective time frame to provide investors with greater confidence. Another factor would be a simplified tax code. Sri Lanka has made progress in this area, but I think it is universally recognized that our tax system needs to be improved in order to deliver clarity and simplicity for implementation and collection. Retroactive taxes and a complex system with several layers of taxation and varied tax thresholds for different industries is a negative for investors who have to then decipher this code prior to making their decisions. Clarity is really king. Red tape and regulatory approvals, as we know, are impediments to facilitating investment. Although Sri Lanka is better than most of its peers in South Asia on this front, we need to improve significantly to get to the benchmarking of Southeast Asian nations and certainly city-states like Singapore or even Dubai. The government's ability to streamline processes for regulatory approvals will greatly encourage and enable investment and capital flows in the future. Investors, I'm sure many of the panelists today, as well as earlier today, would have talked about the requirement for a one-stop shop to set up and secure all the necessary approvals for their businesses. The ability of an agency like the BOI or a mega agency to facilitate faster and more efficient establishment of businesses enables greater FDI flows, not just for projects in the hundreds of millions of dollars, but smaller scale investors as well. One of the overarching themes for investors, both local and foreign, is policy consistency and clear early articulation of policy. We have seen on several occasions the stifling impact of slow communications of a new policy, or worse, a policy U-turn. The revival of underperforming enterprises and Underutilized Assets Act in 2011 was viewed externally as government nationalization of private assets, undermining the sanctity of protections provided to investors under existing laws, including the BOI Act. Retroactive taxes, such as the super gains tax, implemented in 2015, and the taxation implications of the Land Restrictions of Alienation Act of 2014 hurt investor confidence and the appetite for future investment, given greater uncertainty and their ability to plan and predict. Capital flows to where investors see consistency in long-term policy and have the confidence that they are able to plan beyond the immediate. The success stories of economic emergence in countries like Turkey, Thailand, and Korea come from a foundation of implementing progressive, long-term liberal economic policies. What we're really talking about is facilitating large-scale FDI. And this will require the political will to implement more liberal economic policies. For instance, if we look at the corporatization of SOEs with a view to increasing public-private partnerships and potentially the privatizations or listing of SOEs, increasing stakeholder ownership to a wider demographic via local institutional investors and even retail investors. This should enable better allocation of capital to transformed SOEs, which are more efficient and then will compete in the private sector. Our equity capital markets would be significantly boosted from a pipeline of large-scale IPOs, such as the likes of SLIC or one of the state banks, or any of the state banks. The pipeline of such privatizations was a key factor in the development of the capital market in Vietnam and attracting top-tier institutional investors. I also realize at the same time that this is a very politically sensitive subject. We should also look to creating a robust local currency bond market supported by larger institutional investors, such as insurance companies and private pension funds. This will help to facilitate access to longer-term rupee-denominated capital, both in terms of debt and equity. One of the learnings from the East Asian financial crisis of 1997 was that an over-reliance on foreign capital, especially very liquid short-term capital, could be problematic when there are economic shocks and an open capital account. Saying that, the potential relaxation of capital controls is something that we have to look at and would be a great enabler for inflows of capital, as businesses find it easier to participate in cross-border transactions, especially trade. The ability to freely move capital also removes a potential reservation for investors when considering investments in Sri Lanka. We need to look at being more innovative in terms of the development of asset classes for investment. Currently, there are discussions that revolve around the potential for instruments such as REITs and ETFs, and it is important for financial institutions to provide innovative products and develop such markets, while the regulator will look to ensure transparency and investor protection. However, especially if we look at the example of REITs, there should again be policy consistency. If there are restrictions on companies deemed to be majority foreign-owned, and these are restricted from owning and developing land, then REITs would be certainly compromised and limited. Sri Lanka has to consider not only opening up investment capital flows, but also human capital flows to help facilitate the former. We already face skilled labor shortages in several sectors, ranging from construction to leisure. The inflows of labor is something that will be viewed with suspicion, as is the case in most economies, whether they are developing or developed. However, as much as our economy has been sustained by the export of labor, we now need to attract labor into this country. I think the development of a mega conurbation in the Western region, especially with the development of a wholly planned new city such as the port city, provides an interesting and exciting opportunity to attract capital. But as always, the proof will be in the implementation of this plan. Thank you.
LBR LBO Infrastructure Summit 2016. LBR LBO Infrastructure Summit 2016.
Great. Thanks, Anakali. From one investment banker to another investment banker, pseudo investment banker. Come on.
A development financier. Thank you, Kumudu. So I'll speak from here. Hopefully my presentation will come up. Okay. So good afternoon, everybody, and thanks for Lakshman, LBR, LBO for inviting me for this discussion. So I'm just going to share a few initial thoughts with the broader intention of setting up our discussion, which I think should be very interesting. So before I start, and I will just briefly introduce IFC, partly because Lakshman, I think, introduced IFC a bit wrong, and also I think it's also relevant for the rest of my presentation. So IFC is not owned by the World Bank. We are part of the World Bank group. IFC and what is known as the World Bank is actually IBRD and IDA that you see on that slide. And us, along with MIGA and ICSID, are all owned by the governments of the world, including Sri Lanka. But all of us share essentially one board of directors and share one president. But we are separate legal entities and having broadly our own management teams, but we share some resources like human resources and IT and so on. But it's all one brotherhood or sisterhood, however you want to call it. And as you all know, IBRD and IDA, the World Bank, supports the governments of the world, particularly the developing countries. And IFC supports the developing countries by supporting the private sector in developing countries. And MIGA, Multilateral Investor Guarantee Agency, provides risk insurance products, essentially for FDI, foreign direct investment, and ICSID works on dispute resolution and arbitration. And I'll come back to some of these aspects. Now, just get into our topic. The question is, as we look at the Western Megapolis Plan, we're targeting $40 billion plus of investments. Is that right, Naina? In the span of maybe 10, 15 years. And so how can we deliver that? Where can we get $40 billion of funding? And so the first question I would like to delve into is, can this come from public funding or private funding? And Sri Lanka thus far has had a largely publicly funded infrastructure development mechanism broadly, with some few exceptions here and there in the last 20 years, and some of which I think Thilan will speak a bit more about. And our approach has been very much, we want to do these A, B, and C projects. How do we get this specific project done? Who can we tap to fund this project? Can we go for multilaterals? Can we go to the World Bank or Asian Development Bank? and so on to fund this project? Or can we get bilateral sources of funding, or being the same G2G, government to government, which government can we tap into to help fund this particular project? So it's very much focused on a specific project and finding who can we find a financier to fund that project. And I think through this mechanism, we have charted a course, since particularly 2009, we had a number of years of rapid economic growth. GDP growth for about 3-4 years was in the 8 to 10% range. The last couple of years has dropped a bit, but still a healthy 4 to 6% GDP growth. The question then is, how long can we sustain this if it's a largely publicly funded model? And I think that's where we are all pausing across the board and then realizing that we need to shift the modus operandi, because the government's and the public's capacity to fund this growth is going to increasingly come to a halt. So therefore, essentially now we need to change our model from a project-focused, publicly funded model to a different model, where I think many will believe that we need to go towards a private sector-led growth model, where the government will still need to play a very critical role in the shift, as well as the regulation, as well as the mobilization. So there's a huge role the government needs to play to in this sort of almost a paradigm shift, to for Sri Lanka to continue to sustain this level of growth, and hopefully with that paradigm shift we can even jump it a notch above. So that's one aspect of it. Then the second question I pose here is the local versus foreign. So when you're looking at a $40 billion of investments, how much of that can we bring in the local market? I think if you had a couple of projects of $100 million or less, maybe we can try to do that in the local market. When you're talking billions of dollars, we will need to mobilize foreign funding. And Sri Lanka's track record in the recent past is not that great. I think each year we do less than $1 billion, if that. So we really are underperforming on this metric, and we need to change. And in my view, part of that relates to what I spoke before in terms of our development model, in terms of being largely public sector focused and a project focused. So in shifting that paradigm. And then before we speak further, let me just quickly, at a very high level, share, as we look at various different projects to finance, as you all know, there's an equity component and there's a debt component. Typically, and this is really ballpark, 30 to 50% of the project's cost is funded with equity, and the remainder funded with debt. So broadly 50 to 70%, sometimes more. I think in instances where parties have tried to do more debt than that, things have become tricky, and things like global financial crisis has happened when things have been entirely debt financed. Not to say that you cannot do it, but you have to be really prudent and do it in really specific circumstances. So having said that, so then who are the equity investors that we can look at? And as you look at equity investors, you will have the developers for whichever the sector. If you look at a power plant, power plant developers. If you look at real estate development, real estate developers. So different types of entities who will be doing that. Often you have construction companies who actually do the construction, coming and take an equity stake, sometimes partly to be able to make sure that they do the construction. And then you have diversified conglomerates, particularly in a country like Sri Lanka. Diversified conglomerates are quite active developers across the different sectors. Then as you kind of look beyond that typical realm, as particularly you look at foreign models, you see private equity funds coming in as equity investors, sovereign wealth funds. And then you have strategic industry players. So let's say, if you take the Sri Lankan Airlines example before, you had Emirates coming in as a strategic investor. So with the idea of not only helping the Sri Lankan operations, but potentially helping their global operations as well. And then various other parties like equipment suppliers and parties like IFC, who are multilaterals, who take a mobilizing role. So I think, but one key thing I would say in terms of as you look at equity investors, a key part of it is to ensure that you bring in a equity investor really who really has money, who has deep pockets. And one of the things we see in a number of our countries that we operate in is you have idea generators coming and being sort of the equity, but really don't have the funding behind that. And that doesn't really work for the other part, the debt, because if you don't have the money to back your idea, then the debt lenders are not going to get comfortable coming in. So if you have great ideas, make sure you partner with somebody who has the money to put in real equity. And then as we look at debt, you have the typical players of local banks, international banks. Oops. What did I just do? Okay, sorry. Local banks and international banks. And then you'll have institutional investors, the insurance companies, pension funds, and the like. And then the other part is you can issue a bond in the bond market, and you'll see that in Sri Lanka, you'll see that in the international space. And then large projects can bring in export credit agencies. And then the parties like us, multilaterals. So let me just share this, and I think it's probably going to be difficult to see in the back of the room, but I think the key thing here is about credit rating, and credit ratings are important, and particularly as you look to go to international markets and attract FDI, credit rating becomes quite fundamental. And in this slide, you will see Sri Lanka in the sort of bottom third quadrant, and Sri Lanka's credit rating at essentially B+ in S&P is non-investment grade. So investment grade is essentially the top half of this. So India and Turkey is just above investment grade, and the rest below that. So in order to access a lot of the international funding, international commercial banks, typically you need to be investment grade or better. So which means that all the others need to find other different mechanisms of enhancing the credit to attract international source of funding. It doesn't mean that you can't tap into any international source of funding at all. There are a number of international funding mechanisms that are available for emerging markets, but a large number of them are not. And I'll just quickly share, I think I'm running out of time, one example of how you can do that, and this is an example of a power project we did in Kenya, which has a similar credit rating or the same credit rating as Sri Lanka, where we had IFC and African Development Bank as a financier, but we were also able to bring in international commercial banks by essentially providing a political risk insurance cover through MIGA, our sister institution, Multilateral Investment Guarantee Agency. They provided the political risk insurance cover that allowed an international commercial bank to come and take this risk cover, which otherwise they typically wouldn't have. So this is one mechanism of bridging the gap in this current framework. But I think in the longer term, Sri Lanka needs to edge towards enhancing the credit rating and changing the larger economic environment to be able to attract a larger set of financiers, and for that, a strategic planning to achieve that paradigm shift that I mentioned in the beginning is quite critical. And sort of prioritizing projects, finding projects that are commercially viable, structuring them well, and attracting investors towards that. And let's talk more about that in the panel discussion. So I'll stop there for now.
Perfect, Thomas. Great. Thanks for that lovely presentation.
With that, I think I want to welcome Jim. Jim brings a wealth of experience from Asia, having turned around the operations in Bangladesh, coming to Sri Lanka about a year ago. So, Jim, tell us what we can do.
Thanks, Kumaru. Good afternoon, everyone. It's happy to be with all of you. Standard Chartered Bank has had a significant presence in Sri Lanka since the 1880s. There's nobody more than myself and my colleagues at the bank who'd love to play a major role in the $40 billion of infrastructure development that we're discussing here, we've been discussing all day. But I think it's also important that we examine the situation at present and ask ourselves, what do we need to do to make that a reality? And I think, does Sri Lanka really present a favorable risk appetite for the investor and the financial world to embrace at this moment? Does the country have the financial and social order to maximize all the opportunities that are presented? Financial institutions of all kinds have many considerations to take into account, and one of them is something called country risk. Every country in the world, every lender or financial institution involved in advising, structuring, distributing, or lending takes a view on each country that it's doing business in and creates essentially a limit in their mind or a threshold, and it's broadly just known as country risk. And I'd like to address for a moment this concept because it's critically important for Sri Lanka as well. So what are some of the factors that impact or shape the notion of country risk? Well, one would be its risk rating. And as it's been discussed already, lenders and investors have an appetite and confidence to raise certain large amounts of money and required funding. And a country has to achieve a steady and consistent risk rating so that it can receive the kind of financing, the long tenors it needs, and the favorable pricing to make their projects viable. So ask yourself, is it realistic to surmise that a country with an S&P rating right now of B+, with a negative outlook, can raise this kind of money? Or should the country be required to perform perhaps at least a BB level or better first over a sustained period of time before investors and lenders can be persuaded to commit such large amounts of development funds that are being discussed today? So improving country ratings is very important to this formula. Another area to consider are fiscal policies and procedures. A country's fiscal discipline, its current account deficits, the revenue collection mechanisms it has, and the other basic building blocks of financial well-being are critical factors to consider when organizations wish to develop an appetite for taking the types of risks necessary to provide the price and the terms for money to build desired infrastructure. Consistency of policy is very important. So we can't have any voter-friendly gimmicks or we need a coherent long-term policy, properly passed, properly executed, so investors can rely on sound business objectives and strategies without fear of retrospective impact or capricious change. The tax structures and their impacts are important. And maybe at this time, this is very opportune for the country to revise significantly its tax system, which is taxpayer out there, which is actually underway in the hands of the IMF as we speak. Trading systems, as you've heard already, need to be upgraded so they achieve strong secondary markets that can be created for debt issuances, both government and private. And we have to bring the financial derivatives into this market so they can enhance the capital markets. Today, a currency swap, I think, is frankly no longer than a year. And if it is, it's with very limited appetite. So we have to look into other ways of raising money as well, and perhaps new alternative funding mechanisms like Sukuks, Panda, Samurai bonds, just to name a few. We also need legal frameworks and industrial regulations that are viable. No other country or lender will provide these amounts of money to a nation unwilling to help itself through proper structuring of the labor force, clear and consistent legal infrastructure that creates that required appetite and support for these projects. So a legal system is in place, of course, but court cases, as you've already heard, can drag on for years, costing time and money that could be better spent someplace else. We have to revamp the procedural aspects so that we ensure efficient resolution and provide the required degree of comfort to the potential investors in the event of the dispute. The labor law needs to be much less skewed in favor of an employee and facilitate a performance-based employment environment instead. Some of the current challenges facing us right now are, well, the first quarter GDP growth was pretty good at 5.2%. Second quarter was 2.6%. So we've got about a 3.9% growth rate this year. Still not bad, but not great. The growth in short term is challenging right now because we've got a tight monetary policy out of the central bank and we have fiscal consolidation underway. We've got a high debt to GDP of, I think, 74% or something like that this year. And we lack investor confidence. The average FDI for the last 4 years has barely been $1 billion. We aspire to 4 times that much if we want to take the 40 billion over 10 years. Now, the government is aligned with the IMF guidelines that have been laid down recently, and that's to reduce their fiscal deficits from 7.4% of GDP last year to 5.4% this year and 4.7% next. However, achieving this is going to affect short-term growth. The increase of that from 11 to 15% means that this reduction can be facilitated. But the Cabinet's only just approved it. A change has to go to Parliament. So we hope that something like this might be ready in November. But that VAT increase was expected to take place earlier this year, and it was expected to add 0.6% of revenue growth to GDP. So achieving this year's deficit number of 5.4 is, well, challenging. We've already heard also that the public sector debt is very high, over $9 billion, and almost 94% of that's in the state-owned enterprises. This has got to change if we're going to free up this economy for broader sources of investment. Tax collection, of course, is a problem and a challenge. The ratio of tax revenue to GDP has fallen from, I think, 13% 10 years ago, down to 10%, now maybe up to 12%, but that was largely based on one-off super gains taxes, so that doesn't really count. The low level of domestic revenue generation is what's hampering much of the fiscal and macroeconomic management, and it magnifies the reliance on both domestic and external debt. So the fundamental reforms to the tax policy and its administration needs to aim to raise more than 16% of GDP of sources of revenue for this country. Now, there are opportunities. This ECTA taking place right now with India is one of them. We're looking, I think, to Hong Kong and China for more free trade agreements. Making headway in these free trade agreements will create windows of opportunity, and this can be encouraging. Let's consider, we've talked a lot about the Colombo International Financial Center, renamed, I guess, from the old port city, and as a major sort of step forward. Let's consider the makeup of another international financial center, in this case, Mauritius. So ask yourself, are these conditions that exist in Mauritius today in place in Sri Lanka? Mauritius has been free of exchange controls for the last 20 years. Its ease of doing business index, I think, is number 19 in the world. It takes 14 days to get a work permit, 2 days to register a business. It has tax treaties with more than 30 countries. Its Board of Investment has a sector that champions nothing but the work with the private sector. Mauritius organizes 6 roadshows a year in collaboration with the private sector. 30% of India's FDI flows through Mauritius. That creates an enormous dollar liquidity. Why couldn't that come through us instead? Its legal system is both English and coupled with French law, and I think the ultimate authority is Privy Council in the UK. It has a fully fledged arbitration center, and large French BPOs have set up there. We've also mentioned earlier that the development of the equity market is important. So, as we gather today to talk about what we desire for this country, which none of us, I think, wouldn't say that positively, we need to understand where we are today, and that partnership with the government in achieving the macro and fundamental stability of this country goes part and parcel with our ability to incentivize the lending community, structuring community, advising community of the world to come and participate in our much-needed infrastructure. So I just thought it's important that we understand where we are, we understand what our challenges are, so that we couple that with the realities of the present moment, and we seek to achieve our goals and objectives in tandem, jointly with the leaders of this nation. Thank you very much.
LBR LBO Infrastructure Summit 2016.
Inside this tin is promise and thrill, 200 years of wisdom and skill, homes revived and dreams conceived, freedom to paint and breathe with ease. Inside this tin is fashion for walls, chic for kitchens, couture for halls. What's in this tin, whether light or dark, is made for you to make your mark. It's more than cream or green or blue. Inside this tin are shades of you.
LBR LBO Infrastructure Summit 2016.
Thanks, Jim. That was a pretty tame version of saying our macro fundamentals suck. But we get to. He said that. With that, Tilan doesn't need any introduction. He was delving into these issues 20 years ago and was leading the charge then. So let's hear from Tilan.
Thank you, Kumudu. Good afternoon. I'll try and not have Lakshman raise his hand, so I'll talk a bit fast. I usually do. Okay, my subject matter is PPPs and innovative business models. Sri Lanka's performance in PPPs, I don't want to use the word suck, but actually quite terrible. In the last 17 years, we have financially closed only 3 PPPs of over $200 million. The first was SAGT of $225 million in 1999, during a time we had country risk and a war risk premium attached to the country. Then came CICT, the container terminal where China Marine invested $550 million. That's operational at the moment. And then we have Port City, which was operational, then suspended, now back in action again, but that's still under implementation. So that would put the number of PPPs that are operational to only 2 that are over $200 million. And today's context, in Sri Lanka's economic context, $200 million is absolutely nothing. However, in the 5 years that the Bureau of Infrastructure Investment was set up by me, we financially closed $800 million of PPP projects during the time of where we had war risk, and that would cover not just ports, it covered telecom, it covered power, it covered mini hydro, it covered housing. So let's really look at ourselves very critically and realistically. Now, PPPs are very simply, there's a confusion about the definition of a PPP. In my view, it is a new investment in a sector where the GOSL government might have a stake, there might be an element of regulatory control, there may be a revenue guarantee like in a power project, and it is governed by a complex agreement, not just the BOI agreement, it's governed by a complex, what we call a concession agreement. Privatization of existing assets is not PPPs in my view. However, resuscitating white elephants in the form of a Mattala port can be categorized, in my view, as a PPP. Now, if you go back to the early 1990s when the government at the time embarked on PPPs initially. It was set up in the Treasury for 2 years, and not a single transaction was closed. And then USAID came in and said, we will provide technical assistance to the Board of Investment to set up the Bureau of Infrastructure Investment. And it was successful primarily because new skills were brought into the government. But that was not all. There were 3 institutions that worked in tandem, that fed each other and worked with a sense of cohesion that resulted in some remarkable things happening economically. First, we had PERC, the Privatization Commission, Public Enterprises Reform Commission, that was set up through a statute to privatize existing assets. Then we had the BII to set up new assets and new investments as public-private partnerships. Then we had what was called the PSIDC, Public Sector Infrastructure Development Company, that provided long-term loans for either privatized assets or new assets that were set up under the BII. It had common boards, it had private sector representatives, and worked in tandem. So if you're asking the question, why we are not performing well, my only answer to that, look at the history. What worked? Simply replicate that, because the laws are still there. My own contention is that really very little new legislation is necessary, if at all, though I do understand the world has evolved over the last 17 years. One more important point. In the entirety of the $800 million that was financially closed as PPPs, there was not even one unsolicited proposal. All of them were solicited through the preparation of RFP documents, complex request for proposal documents. So I frankly fail to understand the government's initiative of introducing what is called the Swiss challenge for unsolicited proposals, because I think we are just opening a Pandora's box if we progress in that particular route. Let's look at how things were done, and since the focus of my presentation on financing, SAGT, for example, to fast forward 17 years, it was financed with a meager guarantee, as was mentioned by Kamal. Again, as I mentioned, we had a war risk premium. However, let's look at today. Because we have introduced competition within the port, waiting time for ships, I'm sure 90% of you will get it wrong, has reduced by 6 hours. 6 hours. When SLT was privatized, prior to the privatization, Lankabell and Suntel were brought in, and that was also structured by the BII. At that time, the waiting period for a telephone was 2.5 years on average. Power sector PPPs happened during the time where there was a power crisis. Mini hydros were started, and about 300 megawatts of private power were implemented. In the case of housing, housing was approached on a very structured basis. First, a demand assessment was made, where the BOI hired NDB Investment Bank to do a demand assessment on middle-income housing. Then the BOI encroached on land parcels of other government agencies and acquired those lands as free grants. The RFP was issued. Here's where the novelty comes in, which is really part of my topic. The RFP was not issued to the private sector or the developers. The RFP was issued to banks. Why did we issue an RFP to a bank or to banks, 11 banks, for housing development? Very simple. We said, you find the developer that you are willing to finance. You create mortgage instruments to stimulate demand. Why we did that? The entire RFP was supported by research. And that is what I see lacking at the present moment. Is there adequate research being done to see where the demand is coming from for all what we are doing at the moment? So the bank stepped in, picked the 2 companies. Actually, that was the beginning of a fairly robust mortgage industry, because the mortgage industry was quite nascent at that time in the late 1990s. Then when it came to the IT sector, I mentioned in my earlier panel session about how we put a fiber optic cable on the entirety of the WTC. The Board of Investment funded it. Then when it was found that there was a shortage of IT professionals, the Board of Investment played the role of a venture capitalist, put in 30 million rupees to start SLIIT. Actually, if SLIIT was not a company limited by guarantee, which is not for profit, today it would be valued at over 5 billion rupees. We could have plugged the government budget deficit if the Board of Investment had taken equity. Nevertheless, there are ways that we can be creative to stretch the PPP model. Now, SLIIT effectively was a PPP, but the private sector element was the management, not the money. We flipped the whole idea. We set up an IT institute, a university, which is approved by the UGC, University Grants Commission, with private sector management and management principals, hiring them from places like University of Morotu, etc., paying them market rates. The expressways. The current expressway that you drive on was actually created during the late 1990s, and it was the Katunayak Expressway was structured as a build, operate, finance, privatized project initially, where the contractor would come with finance, the road gets built, the tolls get established over a period of time, then we securitize it and privatize it, so that the government can recycle that money and put it into another highway or something else. So why can't we look at securitizing the toll road now? Take the money, go build the Kandy Expressway. So when it comes to innovative business models, I think such models are being planned for Mattala Airport and the Hambantota Port, which are significant white elephants and drains on the treasury resources, where special purpose vehicles are potentially being created. New equity will be put into those special purpose vehicles by international companies, and then these assets would be transferred to those to that special purpose vehicle. The government will take the money, retire the loan that was taken, or some part of the loan. I don't think the entirety of the loan can be retired, so that again, this improves the government's balance sheet. So I hope these initiatives are implemented very quickly. Finally, my final part is about Port City. Port City is a relatively simple PPP structure. The risk is allocated in a very justifiable and rational manner. The private investor, it's a FDI, undertakes the full commercial risk, investment risk, and marketing risk. It will provide all the internal infrastructure within the reclaimed area. The government will provide all the infrastructure up to the periphery of the site, including the roads and everything else, that power, water, sewerage up to the periphery. And in return, the government gets 62 hectares of developable land and a further 91 hectares of public lands that will have about 45 hectares of parks, etc. Now, the 62 hectares of land that the government gets at today's value is worth over $2.5 billion US. Now, there have been lots of arguments about whether this is a justifiable structure, but if you calculate the overall economic benefits, future tax revenue, various other entrepreneurial talent and new demand that Port City would attract, I believe that the economic justification for Port City is quite apparent. Now, we can approach a similar model for Trincomalee development, which is now being master planned by Sabana, Kandy, where we could potentially look at multiple stakeholders, master developers, it was mentioned earlier, coming in at the present stage. I do not believe we need to wait till all the beautiful plans are drawn out. We need to engage the private sector potential developers now so that we can hit the ground running. I believe the stage at which I believe each new government is given 2 years to get their act right. It happened with the CBK government, it happened with the Rajapaksa government. We have finished pretty much good part of 1 year, but there is a lot that needs to be done to ensure that the private sector will embrace whatever the RFPs that are being issued, but because these township developments are inherently complex, it requires creativity, it requires that we set up, not today, not tomorrow, but yesterday, a centralized PPP unit under, ideally, the Prime Minister's ministry, so that there's a core team of professionals who will prepare the RFPs, assist Megapolis, assist the various line ministries, and have transaction advisors, the investment bankers like Anarkali, on advising on every single transaction. So I'd like to now end by stating that, I sometimes, I sometimes do get quite concerned that if a bunch of us in our 20s and 30s at the time could have, during war years where we were not sure that, whether the next day we were going to come back home alive, could have closed $800 million of transactions in today's environment, we should be looking at 8 billion. We should be looking at least $5 billion transactions. Why? Because look at the level at which the world has progressed in the last 17 years. Look at the reserves of China, $3 trillion. These monies are looking for places. And that's the reason we have a very large Chinese investment pipeline. Sovereign wealth funds have evolved. There's an Asian infrastructure bank that China promoted. We have large private equity companies. So essentially, I would like to state that Sri Lanka is at a stage where we cannot fail. If we are not to fail this time around, we need to build institutional capacity. I mentioned the important institutions where capacity has to be built, BOI, Tourist Board, UDA, etc. We need to be demand-driven as much as possible, and wherever the demand is not there, we need to work towards creating demand. And that is why the title of my speech is PPPs, but nevertheless, I'd like to say that they are complex, inherently complex. The SAGT project had 1,600 pages of legal documentation, and that is why the government needs to attract new types of skills who are creative enough to realize the vision that Megapolis has presented to you over the last day or two. Thank you very much.
Thanks, Tilan. So if my math is correct, you said 2 years, each government gets 2 years to get the act together. Then you leave 2 years for election preparation. That leaves 2 years for execution?
Well, that's what I've seen historically.
Okay.
Usually the first year is a bit of a lost cause.
Lost cause, okay.
And the second year things fall into place,
Yeah.
but things start moving on that side.
Good, yeah. So we'll get into that during the discussion. Gordon, I think we've talked about country risk. What we haven't talked about is project risk, and how do you evaluate project risk? Maybe your experience in Singapore would shed some light to that.
So, Mr. Lakshman, distinguished guests, ladies and gentlemen, good afternoon. It is a true honor to stand in front of so many experts and professionals in the infrastructure development sector. And it's my first time in Sri Lanka, so thank you for welcoming me. Well, I'm here today to share with you some insights on the challenges revolving around infrastructure projects, and how we, as Allianz, as a global insurer, will try to manage the risks together with the clients. And so today, after hearing so much about how the megapolis and also the port city and the projects that will be rolled out, I want to share with you 3 discussion points. So we'll take a look at risk management through an insurer's perspective. We'll look at Sri Lanka through the eyes of a risk manager. And we'll take a look at Allianz and what we can offer to Sri Lanka. So, as you all know, in infrastructure, when we talk about infrastructure, we talk about several aspects. And the speakers from this morning have been talking about transportation, about housing. So we look at several aspects of these. So as a risk manager, we look at specific risks and how things can go wrong in these projects. And so in transportation, we can associate with tunnel collapse or bridge collapse. When we talk about power and energy sector, we can look at flooding and explosion risks. And when we're building housing, we can definitely look at, in terms of high-rise buildings, we can look at water damage and also fire damage. And depending on the severity of these risks and also the mitigation measures in place, the degree of loss varies. And so let me share with you some case studies on losses that has happened in the past. This is a case study about in China in 2003. And this is a project in Shanghai where they were expanding the Metro Line number 4. And a bit of the tunnel had to cross underneath the Huangpu River. The tunnels were two parallel tunnel tubes constructed by a tunnel boring machine. And what happened was that because these tunnels were built in parallel, there were needs of cross-passage tunnels. And the failure occurred during the construction of these cross-passage tunnels. There was a massive ingress of water and soil collapse at a depth of around 35 meters below ground, causing several meters of ground settlement. And the cause of this failure was that they used a ground freezing unit, which its purpose was to stabilize the ground above the tunnel and also to stabilize the riverbed. But when this ground freezing unit failed, it caused the instability above the tunnel. And as you can see from the picture, this caused the collapse of high-rise office buildings, and also some flood protection structures were badly damaged. I'll go into another case study, which took place in Singapore, closer to Sri Lanka this time. This is a mass rapid transit project. This tunnel was built using open-cut tunnel excavation. The tunnel was 15 meters wide, 33 meters deep, and they had an earth lateral support system in place consisting of diaphragm walls and steel strutting. And what happened was when the 9th level of strut was being installed, the collapse happened, and from the investigation reports, there were unusual cracking noises which were heard early in the morning till the collapse. And this is actually a sign of something that was going to go terribly wrong. The collapse area was about 130 meters by 100 meters, causing settlement of up to 15 meters. And the cause was because the earth lateral support system was under-designed. There was no proper design reviews, and also poor workmanship and construction on site, leading to this collapse. And I'll show you the picture first. This is actually a picture of the tunnel construction just next to the Nico Highway, which is Singapore's major east-west highway. And because of this collapse, several workers were killed and injured, and also 15,000 people were affected, and 700 businesses were affected as well. And so this gives you a taste of how infrastructure project failure can not just affect the project itself, but it has third-party consequences. So from these case studies, what can we learn? Well, we know that there is a definite need for robust design, risk management, design review, and independent checking. Second, there's a need for purposeful back analysis, effective instrumentation and monitoring, and also the ability to interpret these instrumentation and monitoring data. Third, there's a need of an effective system of management of uncertainties and quality during construction, or what we usually refer to as the management of change, and also corporate competencies and safety management. And last but not least, the safety of temporary works is just as important as the design of permanent works. And these temporary works and permanent works both together should be designed according to established codes and should be checked accordingly. So how do we view Sri Lanka through the eyes of a risk manager in terms of risk perspective, from a risk perspective? In the figures, I'll show the figures first. In the figures here, I've attached 2 samples of risk assessment reports about natural catastrophe. The one on the left shows 2 bars, which are highlighting the highest risks, which are river flooding and seismic hazard. And the one on the right actually shows that Sri Lanka is actually quite okay. It's quite okay for risk rating in terms of natural catastrophe. And of course, different reports show different things because the topic of risk is quite subjective. But what we can see is that although these ratings are not bad for Sri Lanka, I think all of us in this room can remember that in 2004, there was a big tsunami which hit Sri Lanka, and nobody saw that coming. And also from my colleagues in the Sri Lanka office, they told me that several months ago there was heavy rainfall which caused big floods in Sri Lanka, and these were the biggest floods in the last 20 to 30 years. So the point I want to make is that for the infrastructure that we've been hearing about and they've been planned in a pipeline, we have to be very vigilant in managing these risks, and depending on the design and the codes and standards that are implemented for these projects, we have to be careful, and we have to look at how these design codes and standards are used and implemented, and they can play a major factor in how the infrastructure can withstand the risk exposure. So let's look at what Allianz can offer to Sri Lanka. We are one of the few specialist corporate insurers with a genuine global market presence, which we try to provide a one carrier insurance solution across the whole spectrum of corporate and specialty risks. And actually, in Mr. Liang's presentation yesterday about Port City, he did also mention that China Harbour is undertaking one of the projects in the Hong Kong Third Runway project, which is actually a 630-hectare reclamation project in Hong Kong. And to date, it is one of the biggest, or actually it is the biggest project in Hong Kong. And Allianz is the lead insurer for this project for the 8 to 10 years of the project duration. So I know 630 hectares, comparing to Port City, which is around 200-something hectares. I'm not trying to dwarf what Port City is, but it just gives you a perspective, a view of the infrastructure projects that Allianz has the capability of insuring. So as for me, I'm a risk consultant in Allianz, and I'm part of a global group which has around 300 risk consultants. And we can perform and provide risk management services for construction and civil engineering projects, machinery construction projects, operational power plants, machinery, processes, health and safety management, and also marine logistics and transportation. And with our global group, which is in 29 key countries, and actually we're in 160 countries if you count our network partners, we can help our clients build a global network and enter the globalized market, and which from Dr. De Silva's presentation yesterday, he mentioned that it's important to be competitive, to be globalized, and to be open. And Allianz has the tools, has all these tools to help the client achieve that. We believe that only by understanding each client's individual requirements that we can help manage and reduce the risks by working together and building a partnership and a long-term relationship with the client. At Allianz, we strongly believe that corporate insurance is not just a commodity, but it requires tailor-made solutions and understanding of each other to make it work. There is an old saying that prevention is better than the cure, and in reality, Allianz, we recommend a two-sided approach to risk management. First is prevention, which is through the risk management and advance of the loss to reduce the damage, and also through the cure, which is actually insurance as a risk transfer mechanism. And this is why Allianz, we can support these companies to better understand the risks so that they know what they're getting into and the exposures that they're facing. And we can help the clients to develop a very comprehensive risk management approach. So with that, I thank you, and we look forward to the panel discussion later. Thank you.
LBR LBO Infrastructure Summit 2016.
Insurance is for those who play it safe? We don't think so. Ever since we started Allianz in 1890, We've been with those who cross borders, oceans, continents. We're with those who know there is no success, no fun, no living without daring. We're with those who dare to start a business or a family. Those who grow with fate and failure, even more than with success. We share their triumphs and their tragedies. That is what we were founded for. We can give reassurance because we are financially strong and our entire business is built for resilience. We can give guidance based on confidence. We understand our business and the lives and needs of our clients. We act with integrity, speak with sincerity, and deliver on our promises. Everything we do encourages you to take life into your own hands. So go ahead. Dare to. We're with you.
LBR LBO Infrastructure Summit 2016.
Great. Thanks, Gordon. So with that, let's begin the discussion. We have 30 minutes and 8 panelists. So it'll be interesting sharing our time. So let's start with that. Maybe we start with Liang. You've come to Sri Lanka with the port city or renamed port city. What makes Sri Lanka an attractive destination?
Well, I think, I've been here for slightly more than a year and a half, and I have been very fortunate in the sense, or maybe unfortunate in some sense. If you look at the fact that the government suspended the project that I work in very soon after I arrived. But the plus side of that is that I get to do some things which probably I will not get to do if the project was not suspended. In May last year, together with a TV station here, the project took part in what was called a Rambumi rally, if you remember that. And that kind of brought me around the whole island. I was up north in Jaffna, down south in Matara, Trincomalee, if I can remember all the names though. Nura Elia, Kandy, you name it, all right? So I've traveled around the whole island. And what I can tell you is that, Jim mentioned just now that Sri Lanka does not have the resources that Mauritius have. But I think Sri Lanka has a lot of different other resources if you look at it from perhaps the cultural heritage point of view. You have mountains, you have beaches, right? And compared to the place I come from Singapore. I mean, we have nothing, totally nothing, all right? We just have these people running around and trying to be productive. And if we're not successful in it, we are dead meat, right? But in Sri Lanka, you have the mountains, you have the beaches, you have your tea plantations. I mean, there's just so many things to go for. So this is a place of huge opportunity. And you happen to be a part, I mean, I speak with my colleagues about what I call the 4 major countries in South Asia. If you put that together, there's 1.7 billion population. That's huge. All right, you put the whole of Southeast Asia together, we are not even half of that, or maybe about half of that, yeah. And you have about 300,000 high net worth individuals that we are estimated and expected to double in about 10 years' time. And I think that's a huge market. It's all a matter of how Sri Lanka can attract a part, just a fraction of this, to want to come here and maybe spend some time here and hopefully spend some money, I think, yeah. And therefore, whether directly or indirectly contribute to the economy of the country. And I think there's great potential. It's a matter of how the government can now get its act together, put in the right policy, whether it is in terms of FDIs, attracting FDIs, providing the right financial services for these people to want to come here and do their wealth management, do their financial transactions, whatever it might be. And while they're here...
So creating the right environment and
yes.
to make use of a hospitality kind of
right.
destination.
And all the other resources that the country have, you know, to bring in and to attract this market that, you know, would want to come here if their environment is correct. And I think Sri Lanka can get the act together.
Sure, no, that's a good point. And with that, maybe Rohan, you can, you know, I think Anarkali mentioned it, Jim mentioned it about ease of doing business. We are 107 ranked right now. I don't know if the World Bank statistics are correct or not, but we are. But despite that, you've managed to bring in a company here and start up operations in 3 months. What was your secret?
I don't think it's just my secret, but I think there's a whole team involved. But just to get it in context, about 6 months ago, towards the end of January, the London Stock Exchange Group, in their wisdom, decided to move their Center of Excellence for all tech and development support worldwide to Sri Lanka. So some may have thought this is very brave. Some would have said it's very foolish. But there were a group of Sri Lankans who took it on as a challenge and went about figuring out how to get this thing done. And the good news is that after 6 months, the company has hired over 150 high-end professionals. They've got through all the approvals, the legal barriers, and also started construction and well into completing a 30,000 square foot commercial space in the heart of Colombo. And this would not have been possible or even thought of if the company read all the news and the statistics about the ease of doing business and operating in Sri Lanka. What has been a huge success in my view and the organization's view is the incredible support extended by the main government organizations, and they're not paying me any commission, believe me. These include the Board of Investment, the Urban Development Authority, and the Megapolis Ministry in making this happen. It is done at record speed because they believed in what we were trying to achieve. There was a lot of research done prior to engaging these organizations and planning. But what it shows is that if Sri Lankans decide they want to get something done, they can find some very innovative and creative ways to get it done. And I think as a country and as a nation, we got to understand and believe in ourselves that we can make almost the impossible happen, right? And I think there are a lot of reasons why we can find why we can't do things and why we shouldn't do things. But I don't think we have time on our hands. We have to just get on and do it now, okay? And I think the planning and the thinking is all great stuff, but I think there are organizations, and believe me, the London Stock Exchange Group is one of the most regulated organizations in the world. And believe me, every level of approval, every line we had to get it approved. And what is incredible was the Sri Lankan government organizations worked at a faster pace than we could actually get our approvals in place. So I don't think that is an excuse.
So the institutions are able to keep up with you guys if you pitch it to the right people at the right time.
Absolutely. The timing is important. You got to sell the vision, and they must believe that you're doing the right thing for the country. Okay? And if that is not established, God help you.
God help us all. Anakali, the similar type of question, because you were you were involved with TPG coming into the banking sector. That was a landmark deal in the private equity community. TPG, one of the largest private equity funds, I think the third or the second largest private equity fund, bought into a bank 70% share, and the legislation at that time did not allow for that majority ownership by a single entity. What's your experience with that?
So, in the context of that particular transaction, I have to say our interaction with the regulators was very positive, both with the central bank and the SEC. The feedback from an investor like TPG was that it was relatively easy to communicate, and also the response times were very good. I mean, gestation periods for transactions here tend to be anywhere from 6 months to 18 months. It errs more to the 12 to 18 month side, and it took us quite some time, especially because in this case it was a highly regulated industry, and we had the restriction. But it was a landmark transaction, and they're an investor that still looks for opportunities and will continue to look for opportunities.
Yeah, I mean, they invested in the healthcare sector as well.
That's right.
But is that similar to Rohan's experience? It was the right time, right place, right people?
I think it was the right opportunity. We did not go in for an investment trying to do the same. If you had tried to do that investment or wanted that level of ownership, let's say even in the likes of an NDB or a Sampat Bank, I think we would have struggled. We would not have met the regulators' criteria. So it was the choice of the investment as well was critical.
Right. I think that's like to bring in Thilan to this, because when you talk about the right opportunity, you talked about private PPPs. Do we have a pipeline of PPPs? Now we're talking about, let's bring in the private sector. If 10 investors come in today, do they have projects to invest in?
I'm not sure to answer honestly, but I believe there's a pipeline of pipeline projects.
That's a new one, so you can elaborate on that then?
Because to me, what I mean by the pipeline is having an official solicitation through an RFP. And at the moment, I'm not in government, but I do not believe that, I mean, there are some at advanced stages of negotiation. I believe that the Hambantota port conversion into a more commercial operation is at an advanced stage of discussion. So that was my whole point, that it is important that the Policy Development Office of the Ministry creates the policy environment. Oh, yes, there is, of course, the East Terminal open today. There's one. Right. So I'm sort of struggling to come up with, but I'm sure Nayana has a few. So yes, probably there can be a lot more.
Okay.
The East Terminal took a little while longer than anticipated for the RFP to come out, and for some strange reason it was the ADB that prepared the RFP. I don't get it, but that's my personal opinion.
Right. Thanks. In terms of, so we talked about nation building projects, and Anupam, I'd like to get you on this. There's a correlation between nation building and nation branding, which you talked about. What's the correlation between the two, and is there a correlation between nation branding and FDI?
Sorry, could you repeat the last part?
Is there a correlation between nation branding, with your experience with Singapore, India, and London, and increased FDI flow?
Sure, absolutely. I think the way I'd describe it is a spark and glue sort of a strategy. If nation building is about finding the sparks whether it's a megapolis or any number of projects that drive economic development, you do need a glue that brings the whole story together, and that's the nation branding. So nation building and nation branding ought to go hand in hand to result in a virtuous cycle of positive economic investment. You mentioned 3 examples, London, Singapore, and India. India, I spoke a little bit about, and I think the data shows that there's a very clear correlation. In fact, it's interesting that some of the issues that are being brought up now as interest has picked up again in India for a variety of reasons, some of the issues remain. Some of the issues have improved. The fact is money flew into the country, money was made, companies invested, jobs were created, tax revenue was earned. There have been issue of retrospective tax in India, etc. But I think the story holds, and there has been continued investor interest. Obviously, the peaks and troughs have been there, and I think in a large measure, it's been because nation building and nation branding weren't going hand in hand. In London's case, it's really interesting. Until the arrival of the mayoral office, and not many people know that the mayoral office is only 15, 16 years old. Ken Livingstone, who was the first mayor of London back in 2000, it was really his idea to bring the Olympics into London. It was hugely controversial, but I think there was an extremely interesting story to build, not just obviously London, but the UK, and taking a deprived part of London, East London, and creating a whole legacy around that, partnering with a shopping center company like Westfield and creating a really interesting, compelling project, which then became the legacy. And it's been one of the most successful stories, and politics aside, because there were 2 mayors, Ken Livingstone and then Boris Johnson, who got behind this, because there was really a team. The CEO of London 2012 was actually an investment banker, Paul Dighton. He was the one who was going out there raising the money. So I think it has to be a team effort. Singapore is a fascinating example of how it has continued to, perhaps in fact, not even tell its story, because it's such a firm believer, I think, and tends to be on the back foot often, and let stereotypes define Singapore. I keep talking to some of my friends in Singapore who work on marketing Singapore, that it's time to be a bit more confident. But I think there's a great learning there of being conservative, and getting the product right. So I think nation building and nation branding are absolutely go hand in hand. They can be driven independently, though. It's not that they have to be driven by the same set of people or the same set of agencies or the same set of stakeholders. There needs to be coordination and communication.
Perfect, thanks. Kamal, Kamal, and then I'll get to Jim as well. I think a similar type of question is, if I ask you to take your development financier hat off and just think of as a financier, what's Sri Lanka lacking? Because we're not getting the funding that we're looking for. What's the bottleneck?
I think the funding is actually not the issue. Funding, and the reason I say that, despite my presentation in the credit rating and therefore potentially certain types of funding not directly available, but still can be mobilized with certain enhancements. So, and then there are various different funding sources that can be tapped into for particular risk profiles. But I think it goes to the point that Thilan was making. The right projects are not there, and there are a number of reasons that the right projects are not there. Mm-hmm. And it's about packaging the projects, making sure the right contractual structures are there to be able to mobilize the financing, and then creating a larger environment that gives confidence to investors to come in, because there is a broad strategic plan. Is because larger investors will come not for one small investment, because they see this is just an entry for much more to do. And I think that's where I think a megapolis plan is a wonderful first step, and that we've taken, of setting the large ground plan, but we need to now move into the next implementation plan of creating those RFPs, having that project pipeline, and having the right contracts and a competitive process through which projects are awarded, so that investors get the confidence that it's not a few who have the right access to the right people will get the projects, but you will be able to attract the right investors who are competitive, who have the capacity, who have the technical experience, and they know then, because they have the right skill levels, they can compete and get the right projects. So once you have the right players and the right contractual structures, financing can be delivered.
Can be done. Okay, good. Jim, macro fundamentals. You talked about that, just listening to your presentation and the numbers that you're quoting that are fundamentally, we have a macro fundamentals issue. Are we focusing on the wrong thing by building more infrastructure and focusing on infrastructure before we get the fundamentals right?
No, I don't think you're doing the wrong thing. I mean, they can be concurrent, but they have to be in partnership. And so this is such a broad topic. It's difficult to pinpoint one particular issue or the other. The country needs infrastructure in so many different ways. The word infrastructure itself means many different things, right? Not just roads and bridges. But at the same time, it needs to improve itself so that it is more attractive to both the existing local economy and that very large and desirous global economy it wants to engage. Right. So it's got to find a way to keep going, but at the same time keep improving.
Keep improving the macro fundamentals.
So that more and more people want to join this tremendous nation in its quest to go to the where it wants to go.
There's actually an audience question as well to follow up on that. And I'm going to quote the audience. Jim spoke of high level of country risk in SL within this Within this context, what are the available funding sources to fund USD 40 billion in 10 years?
Yeah, I saw that. Who asked that question? No, it's an interesting question, but it's comprised of hundreds of different points. $40 billion is just a number. It can be $40 billion spread out in so many different things of raw infrastructure, manufacturing capacity, service industries from schools and all sorts of other things around that. So broken down, maybe I can answer the question in the following way. Would somebody lend $40 billion to Sri Lanka tomorrow for 10 years? Probably not, okay? But plenty of people would be there to fund a series of different types of activities with good sponsors, good promoters, for tenors that are lengthy. But as you get out to the 10, 12, 15-year period, that requires a better country risk view than a 3-year loan or something along those lines. And as you fund with international money, you have to be worried about devaluation risk. And so derivative products are available, but they too are limited on the tenor side as to what people's appetites are. So it's all interwoven. And I guess what I was trying to say at the end of the day was there's plenty of projects, but you can't ignore where the projects are taking place and who the promoters of these projects are and what the effect of the sovereign could have on the private and vice versa. So it's all a partnership, if you will.
Right, good. Anupam, I'll get to you. I'll ask Tilan, in terms of implementation, going back to the megapolis concept, in your experience, having gone through this process 20 years ago, what are some thoughts on implementation? How do we go about doing that? Are there some easy wins that we should go after first?
Yes, I think while the enabling legislation is strengthened or new legislation is being introduced, and introducing legislation, as was pointed out, is a complex process. Even if they may not be an ideal fit within the overall scheme of things, the low-hanging fruit should now be really showing that it is breaking ground. It's been about a year since the new parliament was in place, and I do not think that if you look at the ratio of number of projects, a number of about 170 was put out there, and something in the order of 5 or 6 being implemented, which is around 5%, is not a healthy ratio. And therefore, I really believe that the agencies concerned should put out RFPs as quickly as possible, and not just put, in my view, a bunch of lands or whatever available. I mean, this has been done by the UDA recently, saying that these lands are available for investment under the Swiss challenge method. I really, okay, those are not PPPs in any case. I mean, I'm talking of general investment projects. So there needs to be a more structured approach, probably single window, where one single window would coordinate the other agencies, that would give sophisticated investors the confidence that the process would move forward quickly. So at the moment, I do not think that it was talked about earlier, the interagency coordination is happening, is really not happening as satisfactorily for fast-tracking implementation of projects.
Okay, good. Gordon, I know I want to get you into the discussion as well. In terms of, you talked about project risks. From a project risk perspective, is there a difference between developing and developed countries, how you assess risks, and what should Sri Lanka be, our projects as our megapolis projects are get underway, what should we be focusing on?
Thank you for your question. It's a very good question because the difference between developed countries and developing countries, in a sense, in infrastructure is infrastructure in itself. And in developed countries, you still have metro lines, you have tunnels, roads, bridges. Same for developing countries. So maybe I'll answer this question in 2 or 3 points, maybe. The first point I want to highlight is that if you look at developed countries or cities, such as Singapore or Shanghai or Hong Kong, and as Dorothy Chan mentioned this morning, that the Hong Kong infrastructure is still expanding. And the difficulty of having infrastructure projects in such a congested space in these cities is that there's a lot of uncertainties. There are a lot of things that can go wrong, and because there's not a proper passing of information from the 70s, where the first infrastructure were built, to nowadays 40, 50 years down the line, where we need to revamp the whole system. There can be things that we don't know what's down there underground. We don't know how the initial infrastructure were built. There was no proper records of how the buildings or the foundations were built. So in developed countries, you still get these risks, these concerns. Now, in developing countries, the easiest thing that I can think about in terms of risk exposure is that there is lack of the talent for infrastructure, and as highlighted earlier in the conference, there's not much experience in light rail or these mega cities or megapolis projects where there are local experience in building these. So
lack of talent is a big risk factor when you guys evaluate projects in developing countries?
Yes. Yeah. And also, I think we have to put technology into play as well for risk management. There are so many tools out there that can help risk managers or project engineers do their jobs so much easier. The real-time data for monitoring projects, things like that, which can probably save projects in case of losses.
Good. Okay. Thanks. Anupam, did you have something to add to the discussion?
Yeah, just a point that we were talking about earlier, which I failed to mention, was that, 2 points actually. One is about optimism, and I think its role in branding and a nation, and I think it's almost critical that whoever leads the charge, nation building probably needs to be led by a pessimist or a realist, but nation branding needs to be led by an optimist and a truthful one. I was just going to refer people to a website called ibef.org if they're interested, which was really set up as a resource center. That was the first step in creating an information resource center for investors into India. And I was just checking, and it's interesting to see that the template remains, and it's perhaps the most visited website in India. But I think that's a great place to start, have a website. I did a similar search for brand Sri Lanka as an example.
Right.
Didn't really find anything, though after looking hard enough, I did land up on Invest in Sri Lanka and Opportunity Sri Lanka. But I think that's just some practical things that can be done, you know, while the politicians and the businessmen are talking it out and thrashing it out. Somebody can go and build an interesting website and promote success stories in Sri Lanka.
Good, good. So the open question, I think Thilan brought this up, and anybody who wants to answer this could answer it. It's about creating one single unit for private, for PPP. Is that a realistic goal, given that we have so many different ministries doing the same thing?
Kumudu, more than realistic, it is really the necessity for that is that you cannot replicate the highly specialized skills for PPPs. Putting a piece of land and inviting an apartment developer to develop, it's not a PPP. That's fine. That can be under multiple agencies. These are projects that require months, if not years, of negotiation. It requires high levels of financial structuring skills, legal skills that often involve international lawyers coming to the play, along with certainly local law firms, working with the Attorney General's department, protracted back and forth in terms of what should be the revenue share to the government, what are the risk-sharing elements between the government and the private sector party. You just cannot replicate this across multiple ministries. And you need to bring in highly paid people to do this, to do the core work that is necessary, and have what I mentioned, the USAID line of funding. Thank you, Jim, for your country there. They are willing to offer some money to procure that technical assistance. When SAGT was done, we hired companies out in New York and Europe to form part of the government negotiating team. Because on the other end of the table, we had P&O, John Keel's, a crack team of executives. So we have to meet them head on pari passu. Otherwise, we end up with an unfavorable deal for the country. So that's the reason why I'm proposing that it has to be within 1 year. There's no other alternative.
Perfect. Hey, Kamal, do you have something to add to that?
I took the microphone to kind of, well, say the same thing. But just to complement that, I think to beyond what Thilan said, also having that one-stop shop also helps look at it from a national perspective. When you have different windows focused on their microcosm, then you're looking at that space only. So when you have a one window, you can look at it on a nationally strategic basis, and then match the dots from a national basis. But I was, Thilan said what I was going to say for the rest of it already.
Perfect, perfect, great. Thank you, guys. I think we are 30 minutes is up. Great panel discussion, and thank you.
With Kumudu's permission, could I pose two questions to one to Rohan and one to Leanne? Rohan, okay, you have set up this massive project, not so easy project, highly complex project in a matter of 6 months. If ease of doing business in Sri Lanka is so low, how did you achieve that? What is your experience?
We went through that, right?
Yeah, sorry, you went through that. I'm sorry that I was out for a couple of minutes. I missed that. Yeah.
Yes, if I may answer.
Sorry, if you have already answered, that's fine. Yeah.
Go ahead.
I don't think it is very complex. I don't think in terms of capital, it's quite intense. My personal experience is I don't see a major difficulty in doing business with the local agencies. It's a conclusion I reached maybe 15 or 20 minutes ago.
So Leanne, there was just now a question came. I'm not sure whether it was picked up earlier. So that was about, again, Jim kind of, Jim, the picture projected by Jim was not very encouraging. Okay. Either, very courageous people or, very foolish people will invest money in that kind of a macroeconomic and governance backdrop. So how are you going to bring, but you are pretty confident, you are always very bullish about bringing this 15, 17 billion investments to Port City.
Right. Well, let's say that it's going to be a tough job. It's not easy. Yeah. Shankar from JLL mentioned just now that they were tracking some 300 over cities. Okay, and it doesn't seem like Colombo is standing within the top half of that cities that they've been tracking at this point in time. Jim has mentioned that Mauritius has a great financial center, and all this is lacking in Colombo at this point in time. So what do we have going for Colombo and particularly Port City right now? I think one of the key things is that if you look at it, I've mentioned about the population, I've mentioned about the market potential. And basically, I think it's a matter of how we can put some things together to attract this market. How can we divert those FDIs from India to Mauritius to come to Colombo, or in particular, the Port City?
Can I answer in 1 minute? There are 5 things to build business confidence that we do more of the $1 billion plus transactions that Port City entails. One is, Jim pointed this out, we need the trade agreements, because it's on the back of those trade agreements that we will promote FDI. It's on the back of FDI that we will have entrepreneurs move into this country, expatriates their families, and then creating a demand. That was the first source of demand in Singapore, for example, in the 1960s. State enterprise reform. That's a low-hanging fruit. It is not as difficult as it seems to be. We need to stop the bleeding of Sri Lankan and a whole host of other state enterprises. We need the PPPs coming through. Close 2 transactions a year. Of $1 billion, it makes a difference. We are still a small economy. Tourism, we need to market the hell out of the country. We need to work out a proper roadmap, and that is, again, a low-hanging fruit. And then finally, exports, not just manufactured goods, but services as well. So these are the 5 things. If we do these 5 things, Liang will fill Port City, Megapolis, Nana will be jumping up for joy in another 2 or 3 years' time.
Thank you. Thank you so much.
If I may just summarize that, I think one of the things I wanted to highlight today is that somebody shared on my Facebook an article, and it says, Saudi billionaire closes on New York City, highest pad for $88 million. I shared this with my friends, and I posed a couple of questions. First, will he also buy a penthouse in Colombo Port City eventually? Second, what can he bring to Sri Lanka? And third, I think most importantly, after being here for 1.5 years and having seen the social and political environment around here, my third question is, will Sri Lankans welcome him? So I think if we can bring somebody like this and a bunch of them around, I'm sure the FDIs would follow.
I'm sure you will. Okay, thanks. Before I thank our panel, I just want to touch on a few things. What did we try to achieve? What we wanted to do is create that honest, open dialogue, honest, open, candid conversation on megapolis. We didn't want to have, megapolis guys come in and, making presentations. Okay, this is what we are going to do, because that is available on website. Okay, but what we wanted to do is critically analyze, critically debate about the possible challenges and about, possible pitfalls. And so we can add to the wealth of knowledge the megapolis folks already have. Okay, so it is not to discourage, but to have a realistic, pragmatic view about the execution of this project. Because I personally believe it's a wonderful opportunity for Sri Lanka. I personally believe Port City is a great idea, and it's a great opportunity for Sri Lanka And we should not lose out these opportunities because we have, because of the certain shortcomings. So quickly, because it's a nationally important project for us. Few things. Okay, what came out? Governance. There are some senior, apart from Naina and the speakers from Megapolis, there are other officials from Megapolis as well. Okay, governance and institutional framework. There has to be immediate reforms and rethinking and reimagining and rework in these areas. Talent, we discussed at length. And then, if you want to bring talent and capital, that we need to have, as Dylan said, free trade agreements. And have an open mind. I believe Nana mentioned that. Harsha De Silva mentioned that, Minister. Okay, so there are 4 things that we need to make sure that there is sufficient permeability in our borders. The innovative ideas, talent, trade, and capital flow. Okay, we have this, unfortunately, during the last 10 years, we have cultivated a mentality that we need to be isolated ourselves. That is famous, politician who once said, Sri Lanka should be unplugged from the world trade or world community, because that is what causing the problems. The sad thing is, this stupid politician actually won the highest number of votes in Colombo district. Okay, so there's a friend of mine, Chanuka, he wrote an essay. He called it Biolonomics of Professor Veeravansa. Okay, so we have a lot to do. I think as a media company, it is our responsibility to create discourse and try to create right perception among people by bringing these kind of wonderful people who have expertise in these areas. And I think Thilan mentioned this, and most of the others also mentioned, act now. Planning is enough. Okay, where is the buck? Okay, where is action? So when are we going to see the first, billion dollar, agreement going to be signed? I believe within a few weeks, and I know. Okay, so that will boost the morale of the people. That will also boost the, attractiveness of the country. More than anything, I think that will establish among the general public, hey, there is something really happening. I think that is also important. That's a great point. And we discussed about the bit open-minded. We cannot go back and isolate ourselves from the rest of the world, and we need to plug ourselves in the international value chains, supply chains. That is the route we have to take, and we should take an advantage of our proximity to something like 1.5 billion people. That is excluding East Africa and excluding East Africa and the Far East. And risk, okay, that is something very interesting. I did research. I've been researching for this conference for the last 6 months, and I found this very interesting article, on web, published by Allianz. So I learned a lot, and then I approached. After I read that, I immediately called Sureka Alas, the CEO of Allianz. Hey, Sureka, I found something really great, and you guys need to come, bring your experts and talk in, our conference. So I really thank Allianz and Gordon, and of course Sureka and her team, immediately, capitalizing that, opportunity of, not only sharing your expertise as well as, promoting, what are the things that we need to look into in terms of risk management, and what are the opportunities that I'm not pitching for Allianz, so it's not a sales pitch. They have not promised me 1% of the business. But when I looked at, before I approached them, I looked at the capability of Sri Lankan insurance companies. There are about, I don't know how many insurance companies, closer to 20, maybe more than 20. None of them had experience in underwriting the risk of large-scale infrastructure projects, where particularly the foreign investors are involved. So there's no question that, I thought, these are the guys that I need to go. And finally, branding. I have branding experience because in a previous life I worked for Sri Lanka's best marketing company and also worked for Sri Lanka's best advertising company. So branding is something close to my heart, and I thought that okay, we cannot talk only about the technical aspects of and the return on investment on on a project. We need to change the perception of the investor community. We need to make they are positively disposed towards investing in Sri Lanka. So it is like achieving mental distribution for our nation in the minds of the people. So that cannot be done only through providing rational. I'm not saying that branding is irrational. No, it is. What I meant is not by just providing technical information. So I believe that somebody will from the government will pick this up and take an initiative. We know that tourism board has been doing, but for the last 50 years they have not been able to think beyond the Sigiriya and beach and the wildlife. So if you take the 1950s, Ceylon Tourist Board poster and you compare that what we are doing today, exactly the same thing. So they have not been able to reinvent the brand Sri Lanka. Okay. So I think that we need to completely rethink how we will position ourselves in this highly competitive international investment climate. Because we are not the only player, as I think again Anupam said, the competition is not between the nations anymore. The competition is between the regions and competition is between the cities. So we need to really relook at Sri Lanka brand as well as port city branding. Of course, Lian is working on this, since I understand, and then of course megapolis. Okay. So those are the few things we discussed. Then it is my great pleasure to thank those people who made this event possible. First, the lead sponsor, Millennium and London Stock Exchange. Thank you so much, Rohan, reaching out to us in our previous event, and also MIT, our friends from Millennium IT, who have been supporting us for the last, so many, almost an year, consistently supporting us conducting this event. Also would like to thank Dialogue. I'm not sure whether Jerry is here, and last year it was a little too late, but Jerry gave a commitment, Lakshman, next year we will definitely partner with you. This is, we want to be a part of, future of Sri Lanka, so we really thank. And Jad and Cinnamon Life is for the second time they are sponsoring this. Jad is a new company, new client to us, and of course eFutures, a great IT company, and on this side, Port City Colombo Private Limited, CHEC Port City Colombo Private Limited. Thank you so much, Lian. It has been wonderful working with you and your team sitting over there last almost 1.5 years, and it's a great partnership, and I'm truly grateful to you believing in us and coming forward to support us. Thank you so much. And also Standard Chartered, Jim, thank you so much, and Mrinali and Sanjeevani. Great to have wonderful friends who see the value of, I believe this is not the last time. I believe, there will be many more opportunities for us to work together. Hitachi is Ito-san here, I believe, and there's a Hitachi delegation from India. This is the second time that Hitachi is partnering with us, and I believe that they have a lot of plans for Sri Lanka, and they consider Sri Lanka as a very important market. So, and of course, Allianz, Gordon, thank you so much for joining us, and also thank Sureka and her marketing team accommodating us. And of course, national partners, University of Moratuwa. I'm not sure whether Professor Javadan was here last evening. He generally attends our events. And Urban Development Authority, Road Development Authority, and Public Utilities Commission of Sri Lanka, and most importantly, Western Region Megapolis Planning Project. So it is nice to have, because we want to do this in a partnership, but we would like to retain the rights to develop the content, because content is ours. Okay. But I think they knew that we are going to have honest, transparent, candid dialogue, and they gave their blessings to us. And I would like to thank Adfactors who helped us with public relations and JICA, our friends over JICA, and the Chartered Institute of Logistics and Transport, Ceylon Institute of Builders, then Town Planners Association and Oxford Group and JLL. And finally, big thank to all of you, coming 2 days, last evening, and staying throughout very patiently and trying, absorbing some of the quite complex concepts, and some of the concepts and the terminology and the subjects we discuss may not necessarily what you hear in your day-to-day, work. And I also want to thank, there are many people to thank, but I'm sorry that I don't have time. But I should especially mention Nana. Nana helped me a lot. And Nana is a very busy person, but somehow I was been able to, get him to sit with me and, advise me and talk to me. And Nana also introduced me to some of the wonderful speakers who took part. And apart from Nana, there are many other people. And of course, Dilan, Kumudu, and Gaini and Helani. So we had a lot of discussions on how to conduct these sessions. And we got inputs from the speakers. And most of the speakers, we got feedback, how we need to fashion, how we need. So last 3 months, actually, the titles of the speeches and the kind of people we want to take part, and we would like to have them on platform, and all these things rapidly change as and when we gather more and more information and knowledge. That is why I call it, this is not an effort of LBO, but this is an effort, a collective effort of great professionals who are committed to make our nation a great nation, and it making it a lovely place, for a society and economy for the next generation. So they know who they are, who I'm referring to, and I thank you so much. I also would like to thank J. Walter Thompson, Colombo office, JW, and Alina, and the company Anupam works for belongs to WPP, world's largest communications giant, and partners at JWT belong to the same group. And when I first started thinking about this, to sell the country, so I looked at, who are the people who have conducted successful, campaigns, and I found WPP companies have tremendous experience. So I spoke to Alina, and she's the head of JWT in Colombo, and she put me in touch with Anupam, and thank you so much. And finally, a big thank goes to all the speakers, despite their busy schedules, coming and spending time with us. And those who flew from various places, from New Jersey City to Chennai to Hong Kong and Singapore, sacrificing 2 to 3 days of their working time and spending with us. So I simply don't have words to thank, enough words to thank those sacrifices and the generosity of all our speakers, all our panelists, and all our session chairs. And it is a wonderful experience. Personally, I cherish these experiences because I get to work with people who are extremely knowledgeable, who are highly professional, and much more intelligent than me. So I can learn something. It's a great intellectual experience working with wonderful people over here. So I think with that, I would like to end. And finally, I would like to thank once again Anupam. And I approached you at the last moment. And she was so kind to accommodate me. I mean, I think I spoke to her just last week. When I saw a gap in the agenda, so I immediately wanted somebody who has a practical experience. And thanks so much, Kamal, joining us. Jim, this is the second or third time you're on a second time on our stage, so I hope this will not be the last. Thilan, even though you warned me that don't invite you again, I'm sorry. You will be here in future as well. Gordon, welcome to Sri Lanka. Hope you enjoyed your 48 hours in Sri Lanka. Thank you so much, Rohan. And Leanne, as usual, wonderful to work with you. Kumudu, this is not the first time. This will not be the last time. Okay, thank you so much. It's wonderful to work with somebody like you who is so committed, who absorbs the content, and who worked with me very closely and developing sessions. So that's it, and I would like to invite all of you to join cocktails. And once again, please put your hands together and thank our panel. Thank you so much. Enjoy it. Thank you so much.